I think the way the market's working for us, at least locally here in the Midwest, is right now for us it's still a seller's market. We still see people getting prices that they didn't get a couple of years ago. But I think it's leveling off. I think at this point we're looking at the peak of the market. And for us, and what we're seeing is that prices are leveling off just a tad. It's still very strong. People are still optimistic that they're going to get a lot of money for their house, right? Seasonally, from the Midwest, we have winter months. So in the winter months, it sort of gets, the optimism dies down a little bit. But I think overall, we're still in a seller's market. But I think we're reaching the top. I think we're getting very close to the point where it's going to hit the peak and start going the other direction.
One of the things I would consider as a motivated seller is that, we are at pretty much an all-time high right now. The market has hit its peak at some point. It has to level off or fall. So maybe it'll be a little better a year from now, but you certainly are, as a seller, getting in a risky time because you always want to play the market, buy low, sell high. Well, you're pretty close to a high right now. Maybe you get a couple extra bucks if you wait, but maybe you lose a lot of money if you wait. So I personally, if I was a motivated seller, I would be moving between now and the next 12 months. I would be selling off stuff.
What I do know is that the market is softening a little, and it's time to watch what you're doing. It's hard to say if it's softening because we had a hot run and people are getting a little nervous, or if it's an actual softening. So it's just time to pay attention to what you're doing. Make sure you're executing your moves properly. You're in and out of projects in a reasonable amount of time. If you're doing that kind of thing, if you're doing investing, if you're buying, if you're a real estate investor, you're watching your numbers and making sure you're being conservative. Just pay attention to what you're doing. Watch the days on market. I think the issues with the market are going to be more market specific, state specific, city and county specific than they are going to be nationally. And so it's going to be hard to kind of see what the indicators are going to be overall. A lot of the stuff that caused the last crash, the last market issue, I don't see right now. I don't see the looseness in lending. I don't see some of the speculating that I saw back then, but I do see a little bit of craziness.
So 2018 was a great year for us. However, with the interest rates rising, I think it is slowing down, at least on the appreciation side, a little bit. So we'll probably see that coming into 2019. Obviously, the traditional spring and summer markets, I still feel very strongly about. I would just caution a little bit when you're buying the fall and winter markets, to see where it's going.
Yeah, so I think we saw the peak in summer of 2018. We're halfway through October right now, 2018. So I think it's definitely going to be slowing up. Inventory levels, we're already seeing a lot more houses, and they're taking a lot longer to sell. So for sellers, I think now is the time to get out. And we're just happen to, buy just at that much more of a discount because of, things are just sitting that much longer. As an investor, we have to protect ourselves.
2019, I think one of the things that we're going to see is a continuation of what we see in 2018, which is prices have started to flatten out a little bit. Days on market are starting to creep up in certain areas, especially the ones that are being heavily gentrified, because prices are going up and they're starting to price people out. Not to mention the problem that we have with the interest rates that are starting to rise as well. So I think we're going to see a continuation of that in 2019. Some people talk about crashes. I don't see a crash coming, especially through the same door that it came through before, because that was kind of created through fraud and weird mortgages and things like that. It was an internal problem. We don't have that now because they tightened up lending restrictions. So it's probably going to come from another angle that's going to correct the market. But I think you should expect more of what we've seen in late 2018, which is days on market starting to creep up, and maybe a little bit more of an equilibrium between it being a buyer's and seller's market.
In our market, Boise, Idaho, we're seeing a lot of can't build homes fast enough for people that are moving in. So development prices are rising, but the cost for housing is hitting a point where it's not affordable. So we're seeing we saw a lot of hockey stick, and now we're seeing some level off that's going to, with interest rates rising, we're going to see a little bit of lower appreciation rates, but the demand is still there and the market's going to keep going. And for the near future, I don't see any big bust coming in. It's just going to be a little more mellow and flatten out. So those are the predictions. And in Boise, anyways, a lot of development's going on. So we got to put those people somewhere.